Hey guys, a little bit of a different video, and it's going to be me talking about why the majority of traders are not finding any success. And I can almost guarantee that it's going to be stuff that you've never heard before. So stick to the end of the video if you want to find out exactly what it is. So we're going to get right into it. And the number one thing that I think traders don't understand is statistics and probabilities. And what I mean by that is being able to understand losses and being able to understand how to handle losses and is how to improve instead of refining a strategy up to the point where it doesn't work anymore. What I mean by that, I'm going to get right into it. The majority of traders will go into a community, they'll join a community with a strategy, they'll test that strategy for maybe a couple of weeks. They'll go and send setups in that community asking for feedback. They'll get infinite feedback from traders who are not profitable. They'll start doubting themselves. They'll start looking back at other trades or other traders. And eventually they just go into this infinite cycle of getting negative feedback, not knowing what to do, seeing that your trades don't work out, also backtesting very little and then drawing conclusions on that, and eventually just getting into this infinite cycle of having no idea what the fuck you're doing and having no idea how to fix it. And you're just hopping from one strategy to the other, from one community to another. And in every single community that you go into, you're going to get feedback from traders who are not profitable or coaches who are explaining things wrongly. And at the end of, the 3-4 years, you're still struggling as a trader and you still have no idea what to do. I'm going to give you an exact, basically step-by-step guide on what to do, and it's up to you if you're going to stick to it. I know that it works. I know that it works for a lot of our clients, but this is, in my opinion, what you have to do in order to become profitable. You find a strategy. Of course, you got to know the basics of trading, market structure, liquidity, risk management, stuff like that. You got to know the basics, of course. But step one, after that, find a strategy, a simple mechanical strategy. Why is it important that it's simple and mechanical? That's important because if you're going to hop into a difficult, complex strategy, it's going to be incredibly difficult to find any matter of consistency in that. So you're going to find a simple mechanical strategy. Step two, do at least 100 trades of backtesting without expectations. So do not draw any conclusions if it works or if it doesn't work. There's no point in doing that. You're just going to backtest 100 trades without any judgment. Even if the results are terrible after that 100 trades, you're not going to make any changes. You're going to keep it mechanical. You're going to test at least 100 trades. Once you've tested 100 trades, you're going to see if there's a pattern in your losses. And also, before I continue, it's really important that you test that strategy on multiple different assets and on multiple different years, basically. So do not test euro dollar from 2015 all the way to 2020. No, you got to test it on multiple assets on multiple years. So once you've gathered those 100 trades, you're going to see if there's a pattern in your losses that repeats at least 10 times or more. Preferably, you want to have even more than 100 trades. You want to have 400 to 500. Then you're going to try and filter out some things to see if you can crank up that win rate a little bit. And then if you have a mechanical edge, even if it's not that profitable, you have a mechanical edge, you're going to consistently execute on it. And then as you gain experience and as you keep collecting data, let's say now you have 1,000 trades, you're going to evaluate again and see if there's anything that you're noticing that you might be able to eliminate to increase that win rate a little bit or to increase the results. That's a huge thing because barely anyone does that. The majority of people, they'll copy a strategy, they'll trade it for a little bit, they'll test maybe 100 trades, they'll do no form of evaluation whatsoever, and they'll go on to the next one if they see it doesn't work. Understanding that mastering a strategy takes time, effort, and practice. You're not going to be able to just copy any strategy and be profitable with it. I know I could be because I know exactly which steps to take to basically master that strategy, leading me into step number 3, understanding probabilities. Now, let's say you tested a few hundred trades and eventually you come into this series where you're losing 6, 7, or maybe even 8 times in a row. Is that a bad thing? No, not at all. Why not? Well, if you look at even the professional hedge funds, they'll have losing months. They'll have 2 or 3 losing months in a row. There's no way around that. That's just part of trading. There's no way around that. But even if you have, for example, in our case, around a 36% win rate with a 1 to 3 RR, one of my colleagues, Andre, one of our coaches, has a 36% win rate with a 1 to 3 RR. In a series of 1,000 trades, he lost 10 or 12 times in a row, but he still ended up extremely profitable, really extremely profitable. And if I were to show you his equity curve, you would all be jealous at it. You'd all want an equity curve like that. So understanding probabilities and understanding that losing is not a bad thing. Losing is correct and losing is good if you're following the system. As long as you're following your system, losing is totally fine. Leading me into step number 4, do not always try and look for reasons for a loss. The market, believe it or not, we do not know exactly how the market works or why it moves the way it moves. What we do know is that we can create a statistical advantage, but statistics only play out in the long run. They only play out over 20, 30, 40, 50 trades, not 1 or 2 trades. So if you take 2 or 3 losses in a row, do not instantly go and analyze these losses and try to look for a reason. Which is also why communities can be a little toxic, because if you send in a losing trade, there's always going to be some smartass who knows exactly why that trade lost, leading you into a cycle of confusion, leading you to have more doubts about your strategy, and leading you to eventually not knowing which setups to take because everyone's giving you negative feedback, so you have no idea what to do. So basically what I'm trying to say is try to avoid all this complexity. Keep it simple. Test something. Then if it's not exactly what you want, try and see if there's a pattern that plays out over a long series of trades that you can eliminate. And once you've eliminated it, see it, test it again, see if your results have improved or not. Once you have a decent edge, start executing it on live markets, and do not ask anyone in a trading community for feedback except for maybe a mentor or a coach who you know is good at it. I really want to dial in on that. Do not ask too many people for opinions, because that's what a lot of us humans, we tend to do that basically. We tend to ask for opinions. In most cases, it works against us. So avoid asking for opinions. These are just a couple of things that I believe you should really pay attention to if you want to master trading. And it's something that I've seen countless times. People will join a community, try a strategy. The strategy doesn't work. They'll ask for feedback. They'll get feedback from people who aren't profitable. They'll go into this infinite cycle having no idea what to do. They have no step-by-step guide. They have no idea what they're looking for or how to even improve their strategy or their trading. And they'll just go on live markets and lose tons of money because they have no idea what they're doing. That's just a waste of time. It's a waste of money. It's a waste of potential too. Like I said, it's pretty simple. You get a simple mechanical strategy. You execute that as mechanically as you can. Once you have a data set, you go and evaluate, see if there's a pattern, then you test again with that new data set, and then you'll see if it's profitable or not. Then you'll ask feedback from maybe a coach, but do not ask for any opinions from traders who aren't profitable either. Then eventually you'll see that you gradually start to gain an edge, and then that edge increases as you gain experience. You're not going to be able to have a perfect edge right off the bat. You're going to have to master that as you gain experience. Leading me into my final thing, and I think I've already kind of mentioned it, keeping it simple. The majority of traders are not profitable with smart money concepts or ICT concepts because they're just way too complex. And the harder something is, the more complex something is, the harder it is to consistently execute. I bet a lot of you guys don't know Larry Williams. He's currently the world record holder for the Trading World Championship, basically. And his strategy was extremely simple, not nearly as complex as what you're seeing on the internet nowadays, but he was extremely profitable. So keeping it simple makes it repeatable. And if you can repeat it in the long term, that makes consistency. And that's why it's so hard for a lot of traders to gain profitability, because their strategy is so incredibly difficult to consistently execute that it's nearly impossible basically to even backtest it or gather any sort of data on it, because it's so discretionary. That's why I'm always pushing to keep it simple, keep it mechanical, and try to make it as easy as possible for yourself. Anyways, hopefully I was able to help some of you guys out with this video. If you enjoyed it, please leave a like and subscribe and leave a comment down below. Hopefully I'll see you guys in the next video. Take care.